Hi everyone. I'm pretty certain you can hear me because I've been able to hear David. I think we were slightly overwhelmed that all the audio was working properly. So anyway, we're ready to roll. But as always, may I draw your attention to the disclaimer that you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Just in case some of you are with us for the very first time, what we are going to do in this session, we are going to look at the markets through the prism of volume price analysis, which is the book that is available on Amazon. And David tells me that it's 666 now. 666 reviews. Yes, it's quite scary. There we are. It looks at how you interpret the price action with volume to basically answer the question that we all want answering, and that is, where is the market going next? And in addition to volume price analysis, what you'll also see here are some of the very specialized indicators that David and I have developed. We originally developed them for our own trading and now are also available. And I can see we also have some of our Forex Forex program students as well, because volume price analysis is a methodology that you actually can use right across the markets. It really doesn't matter whether you classify yourself as a trader or you classify yourself as an investor or maybe somewhere in between. I mean, these terms, if you like, it's only a question of time, and time is actually very important in the markets. As a trader, you're not looking to hold an asset, whatever it is you're trading, for a very long time. You're looking to turn a profit on it very, very quickly. Some traders are, trade the seconds charts. David has some seconds charts. You tick charts, very, very fast. The whole purpose is to make money. If you're an investor, you're looking maybe for you're playing the long game, as it were. But the principles of the chart analysis that you do with volume price analysis is exactly the same. The only thing that changes is your focus chart. So if you're down at the faster end of the spectrum, you'll be looking, as I said, tick, Renko, seconds charts, minutes charts. If you're an investor, you're going to be looking at the dailies, the weeks, and maybe even in the months, and a bit in between that they sort of say they call maybe swing trading. You're looking to hold, I don't know, a day, a week, who knows. It's a bit of a movable feast, but in terms of how you interpret the chart and how you analyze the chart, using price action and volume is identical. It really is the same. It doesn't matter. So that's the technical analysis side. And obviously to that, we must also look at what is happening in the broader market in terms of the fundamental news. This is a quick look at the calendar today, because the calendar, the items of news that have been released today have actually had a very big impact, not only on the markets, but potentially a political impact as well. And in our own trading and investing, we have the technical, we have the fundamental. Now, our Forex program students would know this. We also look at related markets. The related markets that we look at in the Forex program are specific to Forex. But whatever you trade, whether you're just on an index, you will still consult what's happening in the bond market. You would look at what is happening in the Forex market. And if you're a stock trader, again, there are elements of other markets that will impact what could be happening on your chart. So it's a very holistic way of looking at trading and investing. Now, getting quickly back to the data. The data today, as you see, we've had this morning, these are all the European flash PMI numbers. The numbers are, they're almost meaningless because they are so awful. From a European perspective and for the euro, what this actually could lead to is a closer monetary union, debt union, because the problem with the euro, and it's the problem with any currency that doesn't have a fiscal union and monetary union, is that basically When you have a problem like you have at the moment with Italy, Spain, really suffering with coronavirus, hugely indebted countries, the northern part of Europe, the Germans, the Dutch, the Finns, being in a much better, their economies are in a much better shape. When you have a situation that we have at the moment, all the strains are revealed, as it were, because obviously they're going to need a lot of stimulus. The Germans historically have not been great fans of QE. In fact, they're fiscally very conservative. I mean, they have huge surplus. They're like the Chinese and well, the Chinese basically. So they have a huge surplus. Basically, they've got lots of money in the bank. They're very conservative. They always run a trade surplus. The southern countries, no, they have large amounts of debt. But if the union is going to continue as a political project, as it were, things have got to change now. Until these numbers came out this morning, terrible. Everybody knows they're terrible, but there's been quite an interesting piece of news this afternoon from Angela Merkel, who's kind of hinted that things will have to change because the political project will simply fall apart. You can see here the UK PMI numbers, pretty dire as well. Then we go to the US. Another 4.5 million people, unemployment claims. I mean, you know, these numbers are just ridiculous. But the market is almost kind of discounting them, because when we look at what's happening in the indices, they've actually gone up. This is quite interesting. The US flash PMI number, slightly better than was anticipated. The number to look for all the time is 50. 50 is this is the, if you like, the inflection point. Everything over 50 is considered an economy that's in expansion. Below 50, well, you can see the depths to which it has fallen because of coronavirus. So that's the fundamental landscape that we're in at the moment. Markets are being driven by obviously the health issue and how well countries are kind of responding, whether they think, you know, they've got a handle on it, and how soon the economy can kind of come out of the deep freeze, which is where it is at the moment. Also explains why the Australian dollar is doing quite well today, because down in Australia they seem to be, you know, they seem to be getting back on track. Tomorrow we look ahead. Obviously, we've got retail sales here in the UK. Lord knows what they're going to be. We've got core durable goods, and we've got the IFO. So we've got sort of, you know, actual data and sentimental data. So that's the kind of landscape. And that's the kind of quick overview that you would do even before you go and have a look at a chart, and just to sort of catch up and see where are we. Well, the Dow's up 320, the Nasdaq's doing really, really well, up 113, and the S&P up 38. Where's the VIX? Where is our fear index? Well, it's below 40. So, you know, markets are calming. Now, when markets calm as well, ranges become a bit narrower. When you look at a chart structure, you're not going to see those great big candles that we've seen in the last couple of weeks. We can see here very, very quickly, and I'm actually going to just talk through one of some interesting aspects of the YM from the perspective of volume price analysis, and also support and resistance. Support and resistance is something we've been talking about in our Forex webinars, but it's particularly pertinent to what's been going on in the YM today. Right, if we look at the daily chart for the YM, these huge candles, I mean, this is hundreds and hundreds of pips here. That is not the norm, but you know, they are tradable. You know, if you know what you're doing, these are very, very, very rare occurrences. These are, you know, once in a trader's lifetime, as it were. And where are we today? Today's candle spread is much more typical, isn't it, David? Yeah. For the, I mean, if you go right back and have a look at, let me shrink this down. Here we are. If you look at that, you know, this chart, that part of the chart bears almost no relationship to what's been happening at, you know, what we've seen happening and what we are seeing now. So it's an indication, what you're looking at the chart at the moment is an indication that there is a kind of normalization for the time being. That's all we can say at the moment, for the time being. Are we going to get a repeat of this very dramatic price action? Possibly. Who knows? We will have to wait and see. And it's also a fantastic example of markets fall in the velocity in a fall is absolutely astronomical. But when they rise, they don't rise with the same speed. And you can have a look at that. If you go back and have a look at a chart, look at the time that it took to get, you know, from here to here, and the spread of those candles, tiny, you know, pushing higher, but that's what markets do. That's how they behave. So that is the kind of, you know, that's what you have to try and establish when you're looking to, as I said, to trade the market. Now, the reason support and resistance, we look at support and resistance is one of the 5 pillars of volume price analysis, but it's also part of, you know, a key concept of all technical analysis. The way we look at support and resistance, we have price-based, and on our, let me move that back to 3 minutes because that's what I want to do. On my NInjaTrader platform, let me just reload that data. Just try it again. Hopefully it will reload. That's it. Right. We have developed an indicator that we actually call an accumulation and distribution indicator. It's not the same as the one that is on our MT4, MT5 platform. And you can see here these lines. What it does is every time this line thickens, and you get a sense of how strong that price-based support and resistance line is. We actually call it an accumulation and distribution, and it's red and blue. So every time it's tested, you just about see it here. That's twice. So well, that's already been tested on 2 occasions. Now, the importance, the key issue with this indicator is the thicker this line becomes, the stronger either the resistance or the support. And then what we look at is basically to get through such a line, you are going to need volume. Volume is the only thing, activity, participation, the only thing that is going to break through that support or resistance. And then it obviously, once it's through, you would then use it as a potential for where is the price going next. We also look at support and resistance through the prism of volume, which is why we have developed this indicator called the volume point of control. Now, the volume point of control is this big, thick yellow line here, and it's that zone in the chart where price has been in agreement. There hasn't been any desire for the market to go one way or the other. It's a congestion phase, it's a consolidation phase. It could be in consolidation for all sorts of reasons, ahead of an important piece of news, or it's simply range bound. Markets spend an awful lot of time in ranges before they do break in one direction or the other. Now, what also happens with the VPOC is that is the fulcrum, the center, if you like. But what we also have is we have these other volume strips, they almost are. They are points of support and resistance, but based on volume. As you can see here, we see that the price here actually stopping at this volume strip here, and in between you will either have what's called a high volume node or a low volume node. When you have a high volume node, as you have here, you will tend to find that the price has actually taken quite a bit of time to get through. It's really struggling to get through. If it hits a low volume node, it will tend to go through very, very quickly. So not only does it give you support and resistance from a perspective of volume and also volume over time, what it also gives you a hint of is basically when it gets to this particular region, if it goes through perhaps a price-based support on a resistance line, is it going to go through quickly, or is it going to be a bit, you know, as if it's, you know, running through treacle, as it were? And that is what this is telling you in this histogram. The third way we look at support and resistance, certainly from our quantum tools, is we have developed the Camarilla indicator, and this is price-based. And the way this indicator works is basically all time frames up to 1 hour. the levels are recalculated every day. So you come, whenever the market rolls over, the values are recalculated. And instead of having just 4 levels, which is much more typical in a Camarilla, we have 6. In fact, you can just see the 6 that I'm just bringing up here, as we can see here. Now, the reason I've brought up the 3-minute YM chart is because there was a really nice example of all these levels coming into play at the open. One of the most difficult things, certainly for day traders in the US session who maybe come to this market clearly when the market opens and maybe don't trade Globex because they're asleep or it's just doesn't suit them, is you always get a volume surge at the beginning of the open, and you also get volatility. And what I've done here, what I've done with my charts now, and maybe it's something you'd like to think of as well, whether you use quantum or whether you have other indicators, is rather than load your chart up with everything that you can think of, is actually split the charts up into maybe support and resistance using Camarilla on one, and it's quite a clean chart here. I've got a white background. All I've loaded up with is the up-down volume that we use for the analysis with price action. I've got my candles, I've got my Camarilla levels, and I've actually added the one indicator which David and I were talking earlier, that if there was one indicator that we had on a desert island to trade, if that were feasible, David, what would that be? Other than volume? No, other than the price action and volume. It would be the volatility indicator. What this indicator does, it fires in real time, and it basically signals that the price action on this particular candle is outside of the average true range. Is the candle that has the volatility has come about. There's velocity that's entered into the market. There's momentum that comes into the market, but it's telling you this is not the norm for this particular time frame and for this particular instrument. And what tends to happen, almost 100% of the time, the first thing that happens is the price will retrace to within the spread of the candle. Now you can see here and here, it did actually do that. Now this is the open. We had the volume rush, we had the candle go up, then we had a bit of a pullback, and then the price retraced to within the spread of the candle. That can trap a lot of traders, either when they enter on a momentum candle like this, so they are caught. Now in this case, it retraced, it then carried on, the volume carried on higher. Then we had the third candle, but look at the spread of this candle compared with that candle. Look at the volume. What is that telling you? That is telling you that this candle here and that volume is an anomaly, because if it took that kind of amount of volume to move the price that much, then this volume, that should have been much, much higher. So you get the initial volatility, the volatility surge, which results in the volatility candle, the retrace to within the spread of the candle, the second candle, and then the third, and then we have the pullback, we have the correction. What's interesting is the correction also occurred at, where is it, the S3 of the Camarilla. We know that's a correction because we've got the candle and we've got the volume as well. Now this volume bar under here on this candle, if you see here, it looks weak. You've got a spike to the bottom, to the top of the candle, so there's weakness coming in, a little bit of buying, but there's no actual follow through, because the R2, the support line then comes in, and then you get a little bit of congestion before it moves higher. So you've missed all this. You've been caught out. You were on the wrong side. What do? Well, you look at your levels. You wait until there is a break higher. There's a very, very nice break higher, and this is the little bit of trend that we've managed. It's a nice clean trend on the YM, remembering that the daily candle is fairly compact compared to what we have seen lately. And what's interesting, it's got reasonable volume going under those candle, nice steady price action. Where's this going to? the Camarilla, the R4. The R4, the S4 are key levels on a Camarilla. A breakthrough is normally it's considered a genuine break, but what we got a break of the line, which often happens. Then we had a red cap, and we had actually a 2-bar reversal, and down it went. Now it's testing it again, and we've had a pullback, and now it's looking to want to move through that R4 level. Now, the other thing about this indicator is if you go to the 60-minute chart, you will get totally different levels, because these levels are calculated and they stay on the chart for the next week or so. And in fact, on this daily chart, I've actually got the sessions on here. So that was yesterday, and here we are. This is the hourly chart. We had a volatility candle on the hour. This is the retrace back into the spread of this candle, but they give you price objectives, places to put your stop loss. Now, in terms of actual entries, let's just move that back to where we were there. Let's move that, stretch that out a bit. A Renko chart, where are we doing here? And in fact, I've actually managed on Ninja, you can put the Camarilla on the Renko chart. Where would you look to enter? Well, this was the sort of the start of the open at about 4:30. You can see the little pullbacks corresponding to the volatility that we saw at the time. Well, that's the congestion. If you missed all that, this is the R3, nice solid support line, and this is what you would be looking to trade between here and here. That's what the Camarilla helps you to do. And for this to move higher, what does this price have to do? It has to get through the R4. It's tried once, it's tried twice, and now it's going to try again. More than likely, the news there's no more news. Don't know what's going to happen in the rest of the session. Possibly simply going to move sideways and be in a range. But you know what is likely to happen. Why? Because you understand chart structure, you understand that what you're looking at, what your expectation is of the type of trading environment that you can expect at the moment. And in fact, if we look at the 10-minute chart here, we can see this is the congestion around the price where it is at the moment. We've got very clear levels to the upside and obviously to the downside as well. But in terms of overall direction, if we go to the day, what have we got? Well, we're in an up candle. I mean, there's no, that's I don't know what the volume is. Let me just take that. I don't have the volume in real time. Let's have the day volume. Let's have a look. Volume up, down. Let's just do it on bar. On each tick, let's have a look. There we are. Well, we've got a little candle. There's not an awful lot of volume under that. It's actually less, so far, it's less than that candle. If I'm, as a day trader, I'm just looking at this as well as, am I looking at an uptrend, or am I looking at a downtrend, or am I looking at a congestion? Well, at the moment, I'm still looking at it going up. If I'm looking at this for longer term or as an investor, yeah, this is a V-shaped recovery. I don't know. I mean, it's too hard to say, but it doesn't look terribly strong. Right. That's what I wanted to say about support and resistance on this analysis you would do on any, just because it happens to be the YM, it just happens to be the YM. It could be anything. It could be a stock, it could be a currency pair, it could be a bond, a commodity. It really doesn't matter. The principles are identical. And it could be on a 1-minute chart as well. Right, the truth, I haven't actually, let me just bring up, this is on NinjaTrader. In fact, what I've done on MT5, and I'll explain in a minute. Let's have a look, CAD yen. Let's have a look. Right, well, I've done the same thing on the Canadian yen as well, where I've actually put the 2 levels here. As we can see, all I've got is the levels. I've got the pivots on here. I've got the volatility, the fractals. I'll just move them over there. Right, now here, hopefully I've still got them. This is a fixed 3 pip on CAD yen. The way it works on MT5 is you have 2 options. You can either fix the value yourself, or you can let the indicator give you the ATR value. And I sometimes run both together. In fact, I've done that on Euro Aussie here. And in fact, I've had to find a way of identifying which is which. Let me find it. Seem to have lost it. Where is it? Let's have a look. Pound yen. I can't remember. It's just something I've been playing around with. Have a look. Oh, here they are. Let's dock that. Move that over there. Right, what I've done here on my MT5 for my pound yen, I've actually got 2 versions of the Renko chart. One is based on an ATR and one is a fixed value, because the fixed value, well, you can set it yourself, 2 pips, 1 pip, 1.5, 3, 4, 5, but the ATR, obviously the indicator comes up, just comes with a value. Sometimes it's 4, sometimes it's 7, kind of picks up more the speed of the market. And sometimes when markets are very sluggish, and you only have an opportunity to take literally a few pips or a few points, you may want to speed it up a little bit. So, if something is very range bound, and the euro dollar has been, it could be in a 25 pip range for a whole session, it's going to be really, really difficult to take some points out of that. And similarly with the indices. So it just allows you to manipulate, if you like, the value of the pips coming through the market. As I said, it's whereas with the time chart, you have to wait until that candle actually closes off. And the reason I have this moving average on here is simply identify which is which, because one is running at 2.38. That's the ATR one, and the other one is, where's that one? Is that one gone? There we are. It's running at 3. At 2.38, and the other one I know is running at 3, because that's what I set it up. Now, on the Renko, on the NinjaTrader, it's actually slightly different. The reason I can put the Camarilla on, the way we've developed this indicator is you can apply it to a time chart. You can't do it on MT45. So basically what you do, you can click on the minute chart. The indicator will calculate the brick size, and I've got, here we are, 15. You click on there, 17. Oops, there we are. And that's it. It will the optimal size of the sorry. Yes, and oh, what did I say? A failure of the R4. Here we are, and it looks like possibly we are going to down to the downside. So that's how it works on NinjaTrader. If you want it on the equivalent of the 2-minute, you see that changes there, that value. You then click on there, and you will get a completely different. David has 3 Renko charts running simultaneously with his time charts, because what it allows you to do is to get very, very precise entry points. It holds you in a trade, and it also gives you very, very precise exit points, and especially when you use them. Use it with our trend dot and our trend monitor. I'll pass over to you. Has there been a sudden collapse all of a sudden? Yeah. Oh, well, there we are. Great, falling out of bed. Well, let's see what's happened then.